So what's going on, guys? You know, I hear that you're winning a lot, but you're still losing money. And we understand this to be a risk to reward issue. But what I'm going to show you is a formula that you can implement that is going to change the way you trade forever and make you a profitable trader as soon as you implement it. So if that's something you would like, make sure you hit the subscribe button, turn on notifications, join in on the comment section below. Let's get right to it. So guys, it was a travel day for me. So I got to the markets rather late, right? Basically got in around 12 noon. So the market doesn't really present much of an opportunity for me just yet, unless we break above the 200 here. Okay. So I need to break above the 200 now. What we're looking at is a trade design right here. You guys see that entry? Let me zoom on in. We have an entry signaled here, right? So this candle signals an entry. We get the break here. So 23,140 should be our entry. And then we bring it all the way down to almost a 3-to-1. Now, our system is designed to provide you the most high probability setups. However, it's up to you as a trader to decide or define your risk profile. Thus, that's why we have a standard risk profile of a 1-to-1. And as such, you need to win 50% of your trades to break even or better to be profitable, okay, at a 1-to-1. If you're targeting a 1.5-to-1, you need to win 40% of your trades to break even or more to be profitable. At 2-to-1, 34% to break even or more to be profitable. And at 3-to-1, you need to win 25% of your trades to break even or more to be profitable. Now, as you can see, there's an inverse relationship, right? The more reward you seek, the less win rate you need. But what about those traders who have high win rates and still losing money? It's because there's a magic formula you're not paying attention to that will help you protect your portfolio. You guys ready? Okay. Really quick. I'm looking at my system here. If we get a break above the 200 because we are above the WAP, it's bullish. So I'm just going to go ahead, guys, for the sake of it. We are in power hour, if you will. I hate trading these hours, but we'll just see. Do we get a reversion after opening hot this morning? Possible, right? Although we have a GG flip from green to red, and it's been bearish since. But what I've noticed is 1 touch, 2 touch. We have also here, we have structure, and then there was a break, and then a failure, right? So this level here at 23,109 seems to be really, really important. Now, I want you guys to understand something. I did not chase the candle up beyond or enter a candle up market. I simply set a limit buy. It should have been a limit buy. I don't know why I have a sell limit because I'm not bearish. I'm actually bullish. So I will change this. We will set this to a buy stop. All right. And should the market come up and break the 200, and at the very least, touch GT or attempt to recapture this level here at 23,180, this would be, a decent thesis. But are we bearish? Well, so far, yeah, right? GT is saying red. Everything for the most part is saying red. We're below the 200. We break VWAP. Once again, we are definitely bearish, right? But I'm just going to go ahead and throw a feeler out there. I'm not really trying to jump into the market. Okay, guys? So back to the lesson here, right? We have our risk to reward profiles. Now, what I want to do is drive this point home before I give you guys the formula. Make sure you guys like, share, subscribe. Also, if you got any other questions or maybe any other trading concepts you would like for me to cover, let me know in the comments. Check out the playlist that's going to be here or here. I forget which corner YouTube puts it on. But if you are looking to become a profitable trader, I give you free game, folks. Okay. So anyways, we're not going to highlight our system here, even though it's freaking badass, right? What we're going to do is we're going to talk mathematics, because whether you use our system or not, knowing this formula will change the game for you. All right. Let's bring up one of my students. first off, I have to go ahead and minimize this. And I'm going to bring up one of my students, Anita. Now, Anita's been a student of 1348 for a while. And looks like this year she's casually built herself up $17,000, has a 91% win rate, and has a risk to reward profile of 1.85 and an incredible profit factor. Guys, if you don't know what this is, check it out at tradezella.com. Sign up. I'm not going to drop an affiliate link or anything like that. Just go ahead and sign up, right? Now, students who work with me one-on-one, I'm able to look at their stats, right? And so Anita's a model student. I have quite a few others. But what I want to pay attention to is her risk to reward, 91.76. Now, what does this look like? What would her minimum profit be, or risk to reward have to be for her to break even based on her win rate? Well, I'll show you guys that right now. Now, I've already done the calculation here. What we're going to do is clear it up. So what is the formula? The formula is your minimum risk to reward is equal to, and we enclose it with the parentheses, algebra stuff, right? So 1 minus win rate percentage divided by rate percentage. So what does that look like here? Let's do it. We're going to go ahead and say, first, establish the enclosure here. And what we're going to do is 1 minus, and in her case, what is her win rate? 91.67. So let's call it 92%. Okay. So 1 minus 92, 92. All right. And close it. Then we divide it by 0.92. So that tells us that her minimum risk to reward profile would be 0.08, 0.08, winning 92% of her trades. Right. That's a bare minimum to break even. So what does that tell you? Well, that tells you that she doesn't necessarily need to be very aggressive with her trading because she's relying on her win rate. Not only that, if we go back to her stats, guys, you could see she is absolutely slaying it here. 200x almost, right? She needs a 0.08. She is killing it at 1.85 and a 91% winner, right? And this is over months. So you guys see her green days. This is rather impressive. No red days in sight. Okay. This looks to be starting since February. Way to go, Anita. Even more impressive. Up 17K since February. Okay. So what does that look like on our chart? So if we go back to 1348, guys, oh boy, looks like I got a fill. Nice. Anyways, back to the charts. And let's open this up here. So if I were Anita, I would want to know at bare minimum where to set my stop to break even based on my win rate. Now, we're in this trade and we're coming up to GT. I think that was my only expectation, right, to come up to GT. But I'm going to assume that I have a win rate as high as Anita's. And so what we're going to do is we're going to plot that here on this trade design. We're going to go on over to settings here, and I'm going to set my first take profit at 0.08. We go ahead and zoom on in so you guys can see that, right? This is something that we can set on our trade designs, right? And so what we have here is we know that if we were Anita, we would have to set our stop, right? If we had a perfect entry, if we had the perfect entry here, our stop would be 0.08. Now, of course, that's probably going to be, let's measure this out so we know how many points this is relative to that entry. 1.75 points, guys. So I need 1.75 points. I'm going to set a stop. Right, we'll set a stop and we'll bring it up from 23,147 to 23,14825. There you go. That's all I need to be profitable with Anita's win rate to break even. This is all I need. So, of course, the market's giving me more than I deserve at this point, right? If you were Anita, you would say, oh my God, surely it did. So What I'm simply going to do, guys, because we're approaching GT, and this is a binary moment of whether price action actually breaks or it gets rejected from here, I'm going to secure what's obvious for me right now. And looks like we're almost a grand, whatever. I'll just close that position right there. We're done. Hey, I'm making money while teaching you guys. Now, I want to show another student. I'm going to profile another student, and we're going to see how this number changes, right? And it's dynamic relative to your risk to reward and how you can use this to write your ship, right? So let's go and look at a good friend of mine. This guy, uh, awesome. He is awesome. All right. Let's see here. We're going to find our good friend Julian here. And Julian, here we go. Guys, Julian, let's look at his stats here. He's up 22,000 with a 63% win rate. What we have here is 0.76. That is his risk to reward currently. Not ideal, but based on his win rate at 63% or almost 64%, as we could see right here, 64%, then we need to identify the bare minimum average win loss, okay, so that he doesn't blow up his account. So we're going to go back to the calculator here, guys, right? Remember, the formula is your risk to reward equals 1 minus your win rate divided by your win rate. So let me go ahead and close this up. Let's do this. We're going to do 1 minus, and then Jillian's instance, his win rate is 64%, 63.97. Let's call it 64. So 0.64 divided by 0.64, and his minimum risk to reward, right, is 0.56. Based on his win rate, that is his break-even risk to reward. So what we can see here with Julian is that although he's sub 1-to-1, he's still profitable because of his win rate. And he is rather significantly up on his minimum, right? So we go to the calculator. The calculator says his minimum is 0.56, yet he's at 0.76, right? So it's 20 points better. That's awesome. Therefore, a profitable trader, right? Now, again, for Julian, if he were to set that minimum on the chart, we can go on over to our settings here and set this to, and let's zoom on in. This is going to be 0.5 or 0.6, right? We round it up. So now what Julian has is a bare minimum. So should Julian enter the trade right here, he knows that bare minimum 0.6 relative to his win rate is where he needs to protect his portfolio to break even. You see what we're doing here, guys? And so as long as you understand this, you too will be profitable. And I'm going to show you the formula once again for 1, 2, 3, 4, 5. There you go. Use this formula, guys, to help you write your ship. Use TradeZella or any other journaling tool that's going to give you your win rate and give you your risk to reward profile. And then you can go ahead and figure out, based on your tendencies, what your optimal break-even point should be. And that's where you're going to go ahead and start protecting your portfolio. I hope this makes sense, guys. Make sure you leave me a thumbs up or a like or subscribe, whatever you want to do. Hope you learned something. I'm signing out. Peace.